Hello, YouTube. Is it time for a red alert? Because right now we have stopped going up and we are going sideways, which gives us a head and shoulder pattern. We now have multiple days with lower lows, multiple days with lower highs. And by closing right around the high of the day, I think that all we need to see from these bears into tomorrow is a red close, which would mean that we've stopped going up, we've started going sideways, and the recipe for us to go down is now here. We want to keep in mind as well that we have extreme greed as we're going into the end of the quarter. And what's worked well? Man, almost everything, notably big tech. So we're going to look at some charts today to try to get a very good grasp on where we are and where we're going. So what we can note today is that we do have those lower lows, but we actually have 3 red days, and then we have a gap down pump up, and we're right around the high of the day, which would imply we should be getting upside into tomorrow. Why am I giving you a red alert? Well, because on the weekend, when we talked about this uptrend, what we mentioned is that the apex, and an apex just means where lines meet. We have our green line meeting our red line, and it is right here on Thursday. By the way, Thursday is today. So as we're getting started here, I'm going to ask you for a huge favor. If you could please smash a thumbs up and consider subscribing to the channel, I would greatly appreciate that. So since it's Thursday and we failed to fill the gap and we failed to get to 440, if we're going to go lower, this would be the time for us to do that. I'm going to go through a little bit of evidence here, but before we do that, let's give a round of applause to the bulls, because going into window dressing, what do we have? We got Apple at new all-time highs, record close, new all-time high intraday. We look here to Microsoft, not bad, trying to carve out some support here on what was previously resistance. We look here to Google, it's just going sideways. After its gap on BART, we note that it's just starting to go sideways. Amazon, boomtown, 52-week highs, big power up. Being sued, who cares? NVIDIA, pretty strong here. It's holding 430. That's pretty good. Meta, 52-week high close. Looking here to Tesla, gap down, pump it up. We had an article this morning from Ford saying that they're going to be getting a $13 billion loan to go build out batteries. I think that's the reason why Tesla gapped down. Man, it closed up 2%, right around that resistance. It looks pretty strong to me. So as we're looking at all these charts that look pretty good, you might be wondering, well, why did you tell me red alert in the title? All right, I'll show you a couple of charts now. Here's a reason why. So I shared this to our group. After I recorded the video yesterday, we note that ever since we had our massive squeeze into OPEX last week, what do we have? Well, we have a pretty reliable pattern here. It's a channel lower. What happened? Well, a few times we went up. That's a trap. We went lower. That's a trap. We went lower. Also a trap. So is this most recent move here over also a trap? That's my big question. And as we already noted on the daily chart, there are some very big clues for us to watch for. But try to be a little bit objective with me as we go through here. So we have our big move higher. What happens? They sell it. Biggest bar in the day is red. Next day, biggest bar is red, 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 red. Not by a lot for the last two sessions. It's 1,000 or a couple thousand shares, but every time we move higher, there's someone there to sell it and bring it right back down. For me, this is a telltale sign of window dressing. So let's keep this really simple now. If we go higher and we fill the 440 gap, be mindful of it. If we get closer to the end of the month and we fail to make progress to the upside, pay very close attention to it. Why? After we stop going up, the potential for us to go down increases. And I want to show you a couple more warning signs where there is a lot less motivation to manipulate the charts. Let's go through here. First one's going to be RSP. This one's actually holding up. And what I mean by holding up is that it's holding the low. So we got a micro, sorry, not a micro. We got 145, 145. We got a 50-cent higher low. However, on the Dow, lower low, lower high by 10 cents. Right on its uptrend. It needs to rally from here. It cannot afford to stall out. So the Dow is already flashing a warning about lower highs and lower lows on the weekly chart. So why does this matter? Make it really simple for me. I have a note right here. And what I can do is actually blow this text up to make it a little bit easier to read. There you go for those boomer eyes. All right, what do we got here? Hollow candle signal the expansion is continuing. Lower lows is a warning. So right now we got an inside bar. It's full, which means we're closing lower than we started the week off at 437.50. And because tomorrow's Friday, let's make sure we pay attention to that. So we don't have a lower low yet, but on the charts we just looked at, they're starting to materialize. Why? Well, there's a whole bunch less options into these ones. We got the Russell here. What do we got? Lower high, lower low, below the 200 weekly, also below last week's low. Massive move on the Dow recently. On the month, it is currently still up by about 5.5. Big move. SMH, lower high, lower low, but it managed to bounce off the low. ARC, lower high, lower low. All right, and it's right around last week's low. What do we got next year? The New York Stock Exchange, very similar to like a RSP, inside bar right around our February of 2022 low, or what is the red line. Looking here to utilities, or sorry, energy. While oil is down 4% today, man, bear pivot at the beginning of the week and is currently at the low of the week. That is a lower high and a lower low, and it is below last week's low. So inside bar last week, which led to a fade this week, rocking that downtrend solidly. Looking here to XLK, same thing as same thing as QQQ, looks fine. XLV actually near the high of the week. That is very interesting to me. Yeah, because the candles are full, it's a little bit different too. All right, we got utilities, lower high, lower low, but a failed breakdown back above the 200 weekly moving average. So as we look here to financials, lower high, lower low, right around last week's low. The DAX, sorry, that's Germany. Lower high, lower low, below last week's low. If you're not noticing a pattern by now, hopefully you are. Lower high, lower low for China, below last week's low, rejecting off of that 50 weekly MA. So what does that mean? It means softness. There is softness. It's being sold off, and it appears like there's not really much to save it, at least as of right now. On the weekly for EEM or emerging markets, lower high, lower low, below last week's low. So I really hope you're noticing a pattern by now. And after Jerome spoke, regional banks or IAT, we can also look at KRE, very similar thing. Lower high, lower low, down by nearly 7 on the week, and it is currently at the low of the week. That looks soft. It does not look strong. And then we have other things like copper, right? Copper is only down by 1% on the week, inside bar, but oil is currently down by 3. Gold is also down by 2.37, cracking bearish. Why would gold be down? Well, because they think interest rates are going to stay higher for longer. All right, so let me see if there's any other final warnings here. After VIX expiration yesterday or VIX expiry, what do we get? Well, we got a fresh 52-week low. We are no longer in the teens. We are at 12, which means the market believes nothing can go wrong. We can do no evil. There are no things to worry about. That's pretty obvious when we look at the fear and greed, which is currently at 80, or extreme greed. So people are being extremely greedy. Do you usually make money by going with the herd or by going against the herd? Please make sure to drop me a comment and tell me what you think. If you haven't already, I would really appreciate if you could consider smashing that thumbs up and subscribing to the channel. Thank you ahead of time. So the last thing I just want to do here is, again, we're talking about a red flag for a lot of individual ETFs. But what is missing? Well, we don't quite have the breakdown on S&P quite yet. But when we look to like the 2-year note, up, it's at last week's high, higher low, right around last week's high. That's not what we want to see if we are market bulls. Something else we probably want to see if we're bulls are going to be the DXY actually getting a stomp here. It's actually green on the week by a little bit, adding a little bit of pressure to SPY. But here we go. Let's make it really simple by just focusing on the S&P now, because we're going to do a stream for you into the final hour as we do every single Friday. But just really pay attention to what I have here. So I'm going to go back here to hollow candles and just try to really explain from my point of view what happened here. We note that we have our lower tails, it pushes up. So we get lower tails. Oops, let me go back to S&P. Let me just remove the lines here. There we go. So these lower tails signify, let me actually just zoom in a little bit closer here too, because I know we got those boomer eyes, right? Sorry, boomers. Let's make it a little bit better. Lower wicks leads to a rally. Upper wicks leads to a fade. Gap down, pump up, back test our uptrend. Again, there's those tails or dip buying. We push up, and we got our first major upper wick. Why does this matter? Well, it matters because wherever this candle closes, meaning our current week, and then the following candle is likely going to be the decision software updates. Thanks, Apple. Where we're going to go. Here we have a failed breakout where we get a push, a gap down, pump up, fail to hold it. That led to the fade. The other way we faded before was similar to what we have here, a big power up. We gap down flush, come back up, and then we dump down, or we just get solid fades, which is very similar to what I've been pointing out on that hourly chart for ES. So what I'm really watching for here is where we close this week out. If it's a full candle, it just means we're closing lower than where we opened. Tell me why this matters, because I think I forgot what you mentioned on the weekend. We mentioned that we were going to get Jerome Powell speaking twice. We did. And at least as of right now, we're closing lower than where we opened the week. Does that mean we're down and out? The market rallies over? No, it doesn't. It just means we're consolidating this week. So wherever we close this week, and if we fail to print a higher high this week, currently at 438.37, and again, keyword here being end, next week we print a lower low, what would that mean? It means our gap is being left to the upside after we failed to hold it into our Thursday apex, which is today, which starts to give me some evidence that we could be headed for a bigger fade. And notably, because we have the end of the month on June 30th coming up fast, I really want you to pay attention to the levels, because all we can do is make sure we make a plan and prepare. And that is what we did with our weekend video. So if you want to watch that now, it is queued up here on the left-hand side. If not, thank you so much for watching. And I look forward to seeing you tomorrow on our Friday stream. Thanks so much.